It is 8:13, and it is coming up on the moment of truth, or tax day, as some people like to call it. Some people call it some other things that we can't say on the air. Monday, April 15th is just 3 days away, believe it or not.
Don't let that ruin your weekend, because we've got someone here, David Rae, owner of Financial Planner LA.com, here with your last-minute tax tips that could help save you money. David, no pressure.
Take a deep breath. Take a deep breath.
Okay. So new tax laws went into effect this year. What do people need to know?
So there are big changes coming to taxes. This is the first year that we're paying taxes under the Trump tax plan, which is really bad for millions of Californians. There's going to see about $100 billion more taxable income in the state just from one change alone. They're capping the state and local deduction. So if you own a home or make more than, say, $150,000 as a couple, you're probably going to see your taxes going up. And we're also seeing a lot of people getting way smaller refunds than they've expected in the past.
So what can people do to prepare for this seismic jolt, no pun intended?
So we've got the seismic jolt, and ideally with tax day being 2 or 3 days away, you've made a lot of tax planning in advance, which you probably are not doing if you're listening to this conversation here. But the last minute things that you can do is put money in an IRA or a Roth IRA. You can put away up to $5,500 if you put it into a traditional IRA and get a tax break, which could save you a few $1,000s off your taxes. Also look for deductions that you might have missed. A lot of people did some volunteering or had medical expenses, and they just forget about what you spent on that. And it can really add up. If you volunteered, if you went to your kid's school, if you raise money for charity, your mileage going over there can be deductible. And even any expenses that you incurred. I mean, I joke about having like a kid's bake sale. Those eggs all of a sudden are deductible if they're used for charity.
Really?
Yeah.
Wow.
And you wouldn't think about it. It's part of your grocery bill. And obviously that's a small expense, but I know a lot of people do charity bike rides or charity runs, and you could spend thousands of dollars prepping or traveling, and that's actually a tax deduction.
But aren't people going to be disappointed with their refunds, a lot of them this year?
People are really pissed off. I've been talking to people who are, they're counting on that refund. They've booked a vacation expecting to get thousands of dollars back, and they're ending up owing. Basically, deductions or tax refunds are down about $6 billion already this tax season. That's a lot of money. And one thing you need to know about a tax refund, it's just getting money back that you've overpaid. So if you think about it this way, if you walked into Starbucks and order a coffee and give them a $100 bill, you're going to get a lot of change back from the barista. But if you pay with your app and pay exact, you get nothing back. But the coffee costs the same. Taxes are the same. If you pay a ton of extra money throughout the year, you get a huge refund, which is exciting to have thousands of dollars in your bank account all at once, but you're still paying the same amount of taxes.
Okay, looking ahead to next year. Okay, let's start thinking about next year. What can people do so they can take home more money? So
if you didn't get the refund you wanted or you ended up owing, look ahead to 2019. Try and put money away into a retirement account. That's the easiest way to plan for your future. You get a tax deduction, which lowers your taxable income, and you'll hopefully build some wealth over time. Also look for other things that you could be deducting that you maybe missed out on this year, because you want to bunch a lot of your tax deductions. Most people are taking the standard deduction, which is $24,000 for a married couple, which is great. But if you're near that line, if you own a home or if you have some other business income, look for ways to maybe bunch your charity deductions into 1 year, or your medical expenses. If you happen to get an illness, try and do as many medical expenses in 1 year as you can.
Okay, so we have a viewer question. I donated to my friend's GoFundMe medical fund. Can I write off that as a charitable donation?
So unless this is going directly to an actual charity, you can't write it off. And a lot of people think, it's GoFundMe, it's charity, I'm helping a friend.
Not necessarily.
It's not actually going to charity. It's not a tax deduction. So it's just like you handed your friend 20 bucks. You can't tell the IRS, I helped my friend out, I gave him 20 bucks. Think of it just like you handed your friend and you gave him a gift of $20.
Oh, okay. All right, one more question. I don't have a lot of money. Can I still start a retirement account?
So if we're talking for 2018, it's probably a little late to get started if you don't have a lot of money. But even just putting $25 a month away, if you start at 25 and put it all the way through retirement at, say, age 70, you can have over $200,000 saved by just $25 a month. And I think we could all come up with $25 a month.
Yeah.
Because we'd be surprised how much we waste.
You'd be amazed how much you waste. I mean, I know we're all probably, if you lease your cell phone, you're probably paying more than that, or even just streaming services. Even just wasting money. I love my streaming, don't get me wrong. But we could all come up with $25 a month, and that would put you at literally over $200,000 at retirement, which is great.
Wow, great information. David Rae, nice to meet you and welcome.
Thank you.
It's your first time here. Good to meet you. Thank you. We'll have you back.
And by the way, to get more tax tips from David Rae, go to financialplannerla.com and get your free digital download, 10 big tips to get your financial house in order. David, thanks so much. Really great to see you.